So some different ways of paying wages and salaries. So cash, you can pay in cash. That's acceptable. You can do that. It's really inconvenient to do it, but it can be done. Yeah, mostly, day laborers would probably be paid in cash. But most other folks are going to be paid. The most common ways are check or through direct deposit. I think direct deposit is probably the most common way of individuals being paid these days. But there are a couple of other ways that employees can be paid. One is through pay cards, which is like a debit card. These debit cards, so the pay is issued on these debit cards that are issued to the employees from the employer, from the bank that the employer is using. These are used, I had a friend whose son, when he was 16, worked for McDonald's, and that particular McDonald's paid on a pay card. So if you don't have a bank account, if the employee doesn't have a bank account, this solves that problem. It can create other problems, though, as well, in that, it's hard. You're going to be limited to how much cash you can get each day from that debit card, because debit cards have limits on how much you can withdraw. It's hard to pay certain expenses with a debit card. Your landlord may not accept a debit card for rent payment. So that can make it more difficult. Although with Venmo these days, I suppose you could probably attach it to the Venmo and do it that way. But there may be, again, limits on how much the transaction can be. One of the things that my friend ran into with her son is that the debit card had like a monthly fee on it. And so they kept, every month they'd take $5, and I think he had to have a certain number of transactions, and he just didn't in order to avoid that fee. So that can be a problem as well. He mentioned it's more economical than paper checks, obviously, but direct deposit wouldn't be any more expensive than that. Direct deposit, but that, direct deposit doesn't solve the problem of if you have an employee that doesn't have a bank account. The employer is supposed to offer, if they offer these pay cards, they have to offer an alternative as well. They cannot just say, this is the only way we're going to pay you, is through a pay card. They have to offer paper checks or direct deposit or something else as well. This was a new concept for me, this last one, earned wage access. This is how you pay employees. They essentially have access to their pay currently. Okay, so you're nodding. I haven't had experience with this. This is a new concept to me. And it's usually through an app, apparently, where, you're done working for the day and your pay is available to you at that point. So it's kind of like a constant advance on your pay that you're allowed. You don't have to wait for payday. I don't know that helps people with managing their money or if it hurts them with managing their money. But it is a different way for, employees can have immediate access to their funds. I would assume there are probably fees associated with this as well. The book does talk about the taxes. What did they say? So, yeah, payroll processing companies that offer this will typically charge a fee that has to be paid by the employee. Interim withdrawals are not taxed. However, the taxes on the payments must be deducted from the upcoming paycheck. So you could get yourself into a situation where you've withdrawn so much that when payday actually comes, you don't get a payment because what's left has to pay the taxes that are then due. They talk about the benefits to these, the ability to address immediate financial needs, avoid credit card debt and payday loans, benefits to the employer, improve employee recruitment and retention, reduce costs of mailing checks, and lower turnover costs. So, like I said, whether that's actually a net benefit for employees, I'm sure it's a net benefit for employers. But whether that's a net benefit for employees would be an interesting discussion. Like I said, in the olden days, you just ask for an advance from your employer. But I guess they're getting more creative with that stuff. So different methods, electronic pay stubs. I think most employers these days, especially if they're using one of these other like pay cards or direct deposit, that sort of thing, those pay stubs are going to be electronic. Oftentimes employers will have separate systems where you log in to get your information, get your year-to-date information, your W-2s, all of that stuff. Final pay. So this is kind of interesting. Some states require that if you are terminated, then you have to be paid your entire paycheck, whatever is owed to you, you have to be paid immediately. California is one of those states. So if you get fired today, you got to be paid everything up to today. So the payroll professional has to be ready and available to process those final pays. In Iowa, there isn't anything like that. You just get paid with the next payday. Some states, it says here, Minnesota, if the employee is terminated, the employee's paycheck has to be paid within 24 hours of the employee's demand for wages. So you might have to make an affirmative demand that your wages be paid, and then they have to be paid within 24 hours. As far as federal law goes, there is no requirement to pay like accumulated vacation pay or sick pay or PTO or anything like that. Certain states may have requirements for that. And certain companies individually will have policies as to whether or not they pay that out or not, but there's no federal law mandating that any accrued vacation, sick pay, PTO be paid out when an employee terminates. I think this is the last thing I want to kind of cover here today. Oh no, we'll do fraud as well. Unclaimed wages. Believe it or not, there are people that get issued paychecks and they don't deposit them, they don't cash them. It's happened. I've had experience with that with clients that issue a paycheck and then 9 months goes by and we still have this outstanding check that's never been cashed. So what happens in that case, and this is the case with any type of payment, by the way, the money does not revert to the company that paid it. That money still and always belongs to the employee. If the employee has died or something, then it belongs to the employee's estate. Even if the employee has moved and we can't locate the employee at all, they've gone somewhere, they haven't left a forwarding address, that money still belongs to the employee. They earned it. It does not revert to the employer. So after a year, the employers have to exercise due diligence, send certified letters to the employee's last known address. Usually it requires a year that the employer has to keep attempting this, to locate the employee, to get them to even if they have to reissue the check, maybe the check was lost in the mail or something, if they have to reissue the check, then they do that. After that year, what happens is it goes to the state. Now, the state doesn't keep it. What the state does is they put it into this trust fund and they attempt to locate the individual. And if they can't locate the individual, they have, like in Iowa, we have this website where you can go and look and see if anybody owes you any money. So if you had an employer that sent you a paycheck 6 years ago that you never cashed, if they did it right, your name should be up here and with that, the amount that is owed. So, and if you want, you can go to this is the Great Iowa Treasure Hunt and see if anybody owes you any money. I have never had a student find their name on this, by the way. But you can see, and if somebody sent you a check that you never cashed, or, even if it was a direct deposit that just never went through, So, and it says here, state of Iowa has returned $416 million to people that are owed money. So that's where the unclaimed wages would go. So this is a custodial account that they keep. And I'm sure, the state of Iowa is earning interest off of this while they're doing it, while they're holding it on your behalf. So the last thing I want to talk about today is fraud. So payroll is an area where there is, it's not uncommon to find a lot of fraud. There are lots of different really creative ways for people to create fraud schemes or to commit fraud within the payroll function. Some of those ways, well, one is just identity theft, and we talked about that early on. The fact that it's the payroll clerk, payroll department is privy to a lot of very sensitive information, information that, in the wrong hands, people can open credit cards, open all sorts of different accounts in somebody else's name. Buddy punching is another. This is where you get somebody else to clock you in or clock you out when you're not actually there. This would work in a physical area where you physically have to clock in or clock out. But even with like an ID card or something, if you have to scan your card to clock in or out, you just give that to somebody else. Ghost employee, this is getting a little bit more complex. This scheme is where a fake employee is set up. So, for example, Kelly Murphy, I'm the payroll clerk, and I set up an employee that doesn't actually exist, and her name is Kay Murphy. It's not very creative, but it's close enough so that I can issue myself a check and deposit it, which would be really dumb because it's highly traceable, but deposit it or cash it, and I could still do it because my name's Kay Murphy, right? So this is where fake employees are set up and are paid. So that's another type of payroll fraud. Pay rate alteration, so where you just change somebody's pay rate. And payroll employees could be subject to a lot of pressure from other employees. Hey, why don't you increase my pay by 25 cents an hour and I'll give you a cut of it. Or, hey, I saw that you called in sick, but then I saw you out shopping at the grocery store. You wouldn't want your boss to find out about that. So through blackmail or bribery could be influenced to do stuff like that, to change somebody's pay rate or to change their worker classification if it changed also their pay rate. A great way to fight that, by the way, and this is for really any type of fraud in an office setting, for the most part. A great way to fight that is to mandate vacations. You have vacation time, you have to take it. Because a lot of frauds are discovered when that employee who has not taken a vacation for 8 years, never called in sick, suddenly is in a car accident. And somebody else has to take over their work. And they discover that this wonderful employee who's always there early and always leaves late and never takes any vacations did that because they were covering for a fraud that they were committing. So mandating vacations, companies they've determined mandating vacation times or also cross-training. So having the bookkeeper also work in payroll once in a while. Having the payroll clerk also work in bookkeeping once in a while. Cross-training their responsibilities is a great way for companies to reduce their fraud risk as well. But also mandating vacations, mandating that, okay, you've got 2 weeks of PTO this year, you have to take at least one of those weeks. You have to, and somebody's going to cover for you during that time. So that's one of the ways as well. Let's see. So that's pretty much it for today.